All right, everybody, welcome back to Note Genius. My name is Brian. Today is the day before Thanksgiving, so happy holiday kickoff to everybody who's watching. I'm here today with my friend Colin Martin, aka Colin the Bank, and he's here to give us some great game about notes, about lending, about what he does in the finance world. So, Colin, happy to have you here.
Thank you for having me. I appreciate it.
Absolutely. So yeah, can we start off by just introducing yourself and giving us a brief background as to what you do?
Yeah, absolutely. So my name is Colin Martin, like you said. I've been in the residential commercial lending world, in the note business. I'm a success coach with Note Investor University, and just teaching people about the money business. You know, there's a lot of different avenues, whether you're originating loan deals or you're buying paper on the back end. You know, money's never really going out of style, you know, as they say.
Yeah, everybody needs money. Everybody needs money. So a big part of what you do as a lender is creative financing, you know, finding a way to make deals happen. What benefits would you say creative financing holds versus people going to a traditional bank?
Well, I mean, there's a couple of different avenues. You know, you can go ahead and, you know, like a flipper, right? They can utilize their own money. Maybe they have a private investor that might want to be able to partner up on the deal, right? And kind of sidestep around those guidelines, you know, and the underwriting issues that some people might not be able to qualify, you know, to be able to borrow money from an institutional bank. So, you know, and sometimes people just, you know, when they don't qualify, whether it's maybe they found themselves in foreclosure or they missed a couple payments, now they don't have any leverage or anything to be able to do anything, you know, so they kind of get stuck.
Okay.
You know, so bringing that creative financing in with the private investor, they can look at it from their own perspective, and they can do a deal that maybe your traditional institutional bank won't be able to do.
Okay. So it's all about creating opportunity for everybody. You know, banks have a particular box that they like to stick inside, and you know, people need money even when they can't fit into that box. So that's where you come in.
Absolutely.
Save the day.
A lot of time you're trying to fit you know, whether it's a loan deal or a note deal or whatever the case may be, trying to fit a square peg into a round hole. You know, it doesn't always fit, and sometimes people try to force it into that hole.
Right.
You know, that's when you run into walls. And you spend a lot of time and effort, and it doesn't really go anywhere. You know?
So you get approached with all kinds of deals, you know, aside from note deals. You know, that's what my primary focus is. But do you have a favorite kind of deal or something that's most appealing to you, whether it's a development, whether it's a wholesale? Like, what do you like?
A little bit of flexibility. I like those kind of intricate deals, you know, whether that's a self-employed person, development. You know, my father was a GC for 50 years.
Okay.
He has 4 brothers that were all general contractors in some way. So I got into the finance world to try to bring in a little extra value to him, you know, be able to utilize OPM. And, you know, for a lot of flippers out there, people that are in that space, they're stuck without being able to expand because they're relying on all their own liquidity. You know, so when you can borrow money, and some of these development deals, it's very interesting. You know, it's always been kind of a place in my heart that I really liked, you know, because I was on that job site at 10 years old, you know, with Pops. So, you know.
Development is a big deal. It's always been a big deal, but I hear a lot about development right now. So
yeah, and especially when we're talking about the capital side. You know, as an example, I have a client building about 85 units in the Port of Long Beach.
Okay.
Right. And they have the liquidity to go ahead and do it. But, you know, the people that have gotten ahead and know what they're doing, they don't want to put all their liquidity in. Right. They're putting their sweat equity and their efforts in.
Use other people.
You know, there's the capital stack.
Yeah.
You know, so for them, they're looking for $45 million. Right. They can go get a loan, and they would probably need to come in with, you know, $8 to $9 million in the institutional realm to be able to acquire that financing. Right. Excuse me. But, you know, when you can bring in maybe a financial partner that will come in with that money and give up a little bit of equity so that you can go do 2 or 3 of these at the same time, as opposed to putting all your eggs in one basket. Because in construction or development, something goes wrong. You know, you can't let that derail everything.
Right.
You know what I mean?
Right. So as lenders, note buyers, you know, whatever role we're taking on, we have a lot of opportunity to kind of create win-win situations for ourselves, for our borrowers. Can you think of a situation where maybe you were able to help someone end up in a better situation while still getting a decent return for yourself, whether that's someone who's trying to buy a home for themselves or, anything like that.
Absolutely. I had a client here in San Ysidro, California.
Okay.
Right. And they had a $950,000 home, and only owed about $315,000. So they had great equity. Unfortunately for that homeowner, her husband passed away. So she was grieving and fell into foreclosure. And she was about a couple weeks away from that house being auctioned off. So creating that win-win, like you said, and having the understanding of this note business and how to create a note. With them, what we did was gave her a new $400,000 first mortgage, right? With her, she couldn't qualify for anything because she had a foreclosure. She's missed payments, right? So we actually, that extra, $85,000 that we gave her, we actually included that extra to be able to pay her mortgage for the next 12 months. Give her the time to get back on her feet, not have to worry about, man, how am I going to make my next payment? Am I going to lose my home? Where am I going to live? And all that extra stress on top of losing your better half, that's a very stressful situation where, for her, I felt for her, and just being able to have that creative financing option to say, hey, don't worry, you're going to be able to stay in your home and we're going to cover your payments for the next 12 months.
Yeah.
That was big for her, and then with that was during COVID, she wanted to look into maybe a reverse mortgage to eliminate her payments. But with the lending limits changing, the finance world over these last couple of years has been rocky to say keep it simple, right? But the lending limits changed, and she would have had to come in with about $150,000 that she didn't have
to do the reverse mortgage.
Because the lending limits changed so much, and it changed like that.
Yeah.
Right. So we were actually able, and this was during COVID or just after COVID, where being able to keep her in her home, we had a private investor that said, "Hey, I'll bring in the $400,000." And we gave them a 12% return for their investment.
Nice.
That was secured by that $950,000 home. Right. And there's only 3 potential outcomes that can come from a note, as you know, right? And with them, because she didn't have to pay her mortgage, number one, if you miss any payments to qualify for conventional financing, you have to have 12 months of on-time payments. She was in foreclosure. There was no way she was going to be able to do that.
Right.
But because we included those 12 months of payments into the loan, we cleaned that paper legally, so to speak. Right. And she was actually able to refinance out after 6 months. We helped her clean up her credit, pay off some debts, and just eliminate the negativity that was on her credit at that time with her borrowing history.
Right.
After 6 months, they actually refinanced out. The investor got their $400,000 back.
In 6 months.
In 6 months, but they were paid 12 months of interest.
Right.
So that 12% return turned into a 24% return in 6 months.
Wow.
Right. And I remember the call from the investor that says, wait, I already got my money back. Do I have to pay back this extra 6 months? It's like, no, she refinanced the entire $400,000 into long-term financing. And so they're, wow, I love the fact that I was able to help somebody, kept them in their home, right? And I made a killing.
Yeah,
right?
24% return.
I made a killing. Yeah. And in the worst case scenario, if it would have went 12 months and they couldn't pay and it happened to fall back into foreclosure, that investor is secured by a $950,000 home. During that year, it probably would have gone up to $1 million.
Yeah, it's more than double.
Which, hey, if you buy a $1 million house for $400,000,
that's a win.
That's a win too.
That's a win.
Right.
Yeah.
So you're secured either way.
Yeah. No, I think that's great. I mean, I'm sure she was grateful to you guys for helping her work that out.
She sent me a couple plates home for dinner, and
there you go.
You take care of people, and we work in a referral business where if you do good business, people want to share that with other people.
Yeah, I think that's a great perspective because when you think about when people think of people with money or who work in finance, they kind of think of robots and people who don't really care.
They don't care. Yeah.
They don't care what's happening on the other end. And it's good to hear from a lender's perspective that like we work in the people business, and if you can, as a creative financer, as someone who puts deals together, you can take it upon yourself to say, hey, we're going to make sure that you make it out of this okay. It's not all about the dollar amount. It's about making sure that we're taking care of people.
Absolutely.
Man, I think that's a fantastic perspective to have. I think that will take your business long and far because there are people who don't care.
Yeah. And people know when it's genuine, right? When you're not just doing something for $1 and you're putting people in the best position.
Right.
Right. And working in the financing world, there's a million different programs and products out there. Right. And the way I like to look at it is analyze every single one, whether that be on the institutional side. Sometimes it's better as a note on the private side.
Right.
Sometimes it's not better as a note. Sometimes it might be better to go ahead and, and go the institutional route because a product fits what you're looking for and fits your needs a lot better. You know what I mean?
Yeah. So we talked to a lot of real estate investors in our fields, whether it's, me trying to teach people about notes or you putting together finance deals. And a lot of them are already established in what they do, whether it's multifamily, wholesaling, developing, whatever. How could these real estate investors use notes as a secondary strategy to kind of supplement what they do already?
Well, it's kind of personal preference. I will say I don't know many people that want to be a landlord, right? They want passive income.
Right.
But in most people's eyes, they don't really know too much about notes. So I have a client that's developing about 10 townhomes out in North Carolina. And from talking to him, I was like, hey, maybe as you're building this, because he wants to do more projects, right? I was like, what if you kept 3 of them and did a seller finance where you still collect a down payment and the cash flow that you can keep? So every time you do a development project, you're building your portfolio, not just rolling all the money over into the next project. And if they ever stop paying, you can get the property back. You're still secured, right? You're just not getting that call at 3:00 in the morning because there's a flood and it's your house and you better get over there.
Right.
So, for a lot of developers or, there's just a couple of different times where, maybe adding in that passive cash flow can help supplement, like we were talking about earlier. If you had a $10,000 to $15,000 a month cash flow that's fully passive, where you didn't have to worry about hitting your numbers and chasing that next deal and closing another deal to put food on your table, it would open up, what you're looking to do, right? And you can pursue your passions. Maybe your passion isn't real estate, right? But we all, money's not everything, but it's up there with oxygen, right?
Yeah, sure.
And I think money is more of a vehicle to get to where you want to be,
right? And
focus on your passions,
right.
You don't just want to work to pay bills until you die. Life's about a little bit more than that.
For sure. It's like you said, money, it gives you the opportunity to do what you want. And even if it is knocking out more deals, it's easier to knock out deals when you're not counting on the next deal to put food on your table.
Absolutely.
You know that you have X amount coming in every month that you can kind of sit on while you figure out the right deal.
Absolutely.
What works for you.
And it really, opened my mind when I started looking into notes because, from the lending world, you close a deal, it's a big deal, you make 30 grand. The broker makes 30 grand. And I couldn't help but think, I was like, man, if the first mortgage payment hasn't even been paid yet, and they already paid us out this much on the front end, how much money is in the back end, right? Banks don't flip houses. Banks are in the money business and they just flip paper, right? And I don't believe everybody should only focus on notes by any means. It's diversification, but everybody should have some notes in their portfolio. I think it's one of the best avenues for the masses to get to financial freedom.
Yeah.
Right? Because that's simply your passive income surpassing monthly expenses.
For sure.
That could be $5,000 a month, right? And that could be 3 to 5 notes. And then you're free. Notes don't last forever, don't get me wrong.
Yeah.
But there's a lot of different outcomes that they go down a certain path and sometimes they turn into another note. So it's a beautiful thing.
Yeah. Even if you're making that passive income for 5 years, 10 years, that's 5 years that you don't have to worry about a few bills.
I don't know anybody that's going to turn away, even if it's an extra $1,000 a month.
Yeah.
Right.
Yeah.
And, any money that's coming in that you don't have to work for it over and over again. It's beautiful.
Yeah. On the topic of, because you mentioned your developer friend in North Carolina. So could you possibly kind of double dip into a development deal where you build the property, say you built 20 townhomes or whatever, and then maybe seller finance each property into a note or seller finance the whole development into a note? Or could you kind of...
Absolutely. And what I was telling him with those properties, let's just say that they we're all selling for $800,000 once it was done, right? If you went half, or let's just say half, you sell off, 5 of those, you have $3.5 million that's coming back in, and then you're going to get a down payment on the seller finance from the other 5, but then you're keeping the cash flow, right? And then you can use that to go to the next development project, because now you have the upfront liquidity, to be able to acquire any kind of financing,
Right.
Whether that's from a private investor, that they're going to want to see that you know what you're doing, even if they're private, right? That you have the stability to be able to manage the payments and things like that. But even adding in interest reserves. But I always suggest, if you're going to develop and build up, in my mind, what I would do is keep a couple of them as a seller finance, just so that every time I do these different projects, if your exit is to sell, right, keep a couple so you can build your portfolio at the same time, but you're not being a landlord.
Yeah.
Right. I had a client of mine that's starting to learn about notes, right? And he has 25 properties right now. He said he's bringing in about $50,000 a month. And I said, well, what's your day-to-day? He said, well, I have to go from property to property and manage them and make sure that they're taken care of and nothing breaks and this and that. And he's like, I'm thinking about selling this. And I was like, okay, if you were to sell, how much would you get? And he was like, about $400,000 or $4 million, I'm sorry. And I was like, okay, after maybe capital gains, what would you do with that money? Right. And so I came up with another strategy where that's seller finance. If, you were able to take 20% of each one, but then keep that same payment that they have and give them basically a lease to own option, right? Number one, you're getting some liquidity coming in, right? You're keeping the cash flow that you have. So when you sell it, that $50,000 a month is gone, right? But if you're able to keep that, get an influx of cash, and eliminate all your efforts and get all your time back, is that a better option? It depends on what you're looking for.
I mean,
right?
It depends on what you're looking for.
If you have something to put your money into that's going to replace that cash flow that you're now not going to be getting, maybe it's half of them, right? Hey, it depends on how you want to break it down.
Yeah.
But it's just various different strategies on how you can maneuver within the game. We all know real estate's never going anywhere.
Yeah.
It's pretty much going to appreciate at about a 4% rate. In San Diego, it's a little bit higher than that, right? But, every 18 years, there's usually somewhat of a reset. We kind of saw that over this last couple of years.
Yeah. No, I mean, the flexibility of notes in particular, but real estate, is probably one of the most appealing things about it. Is like you said, there's a number of exits. There's a number of ways that you can roll over, your profit from one to another, or, if you want to get out of the landlord, kind of position, put yourself in another position while still collecting that cash flow. I think that's a beautiful thing. I mean,
absolutely.
Cash flow is vitally important.
Cash is king, as they say.
Cash is king.
And if you can just have that money coming in, whether you're working or not, I heard a mentor say it to me. If you knew how to get residual income, you would run through a wall to go get it, right? And with residuals, it's movie stars and musicians. Yeah, I can't flex the golden pipes like that. Royalties. But there's another way that you could be able to get that cash flow. So, and real estate has probably created some of the wealthiest people in the world.
Oh, by far, yeah.
So it's like, how can you get a piece of it? And today the tough thing is, my parents bought their house at like $175,000, and just off of sheer appreciation, it's almost $1 million house now.
It's crazy,
right? So most people, most of their wealth has come from that appreciation. And if the market were to crash and all your equity is sitting there, it's monopoly money unless you use it, right? So for most people, it's whether that's a HELOC, a line of credit, or parlay, pull out some of that money and put it into another rental property, or there's various different ways. But for the newer generation coming up, it's so much harder to be able to acquire homes, right? And I think that there's not going to be that same middle class, here down the line.
For sure.
How do we get to acquiring and building when, we don't get to come up with, it's not $25,000 to come up and buy a house anymore.
Yeah, 100 plus.
Yeah, sometimes, depending on if you're self-employed or what it might be,
Yeah.
you might be in that 25 to 30% down range.
Yeah.
You know, on a $1 million house,
Yeah.
it could be tough for a lot of people.
Yeah. Coming up with
Especially when wages and whatnot aren't really going up at the same rate.
Yeah.
So
yeah. No, I mean that's kind of what, this channel is all about, is just educating people on the opportunity that's out there to do things like this. Because at the end of the day, I mean, like you said, just the conditions that we live under right now, it's hard to earn a wage that's going to pay you what you need to make that down payment. It's even hard to earn a wage that's going to allow you to save enough for a vacation.
Even survive.
Right?
You
need a new car, you want to go vacation to see family or whatever. And it's like, okay, well, I can't afford to take off work.
Yeah, and for many people, they're one accident away from losing their life savings.
Yeah, exactly.
Right? One unexpected bill that just pops up and it's gone.
Exactly.
Right. Like in the traditional sense of real estate, and being a landlord, if the hot water heater goes out or the plumbing breaks, how many months are you losing your cash flow?
Mm-hmm. You got to fix the roof.
You got to fix that immediately, and it might be 3 months before you recoup the money that, depending on what happened.
Mm-hmm.
Right.
Mm-hmm.
And then the terrible teas with the tenants and the toilets and the trash. And, and then we have issues with squatters these days, where people can not be kicked out.
Yep.
They can just squat there and
live there.
They've been there long enough, and you didn't even know they were in there, right?
Yep.
It's too late, which is absurd. But it is what it is.
Yeah. Y'all hear that? Passive income is the way to go. Notes are one way to generate passive income. There are plenty of other ways, but if you're looking to earn income on real estate, this is something to definitely look into. One other thing I wanted to touch on is, as a lender, you are a master at raising capital, millions and millions of dollars in capital, and having those conversations. And there are a lot of people who want to do deals, even find deals, but they're either afraid to ask for the money or don't know where to find it, or, whatever the case may be. What would your advice be to people who come across deals but don't know where to get the money from?
I think when you first start out, you're a little bit nervous to talk to people, and you want to have every bit of information down and whatnot. And I usually tell people, keep it a lot simpler, because the people with money are looking for deals, right? The people that have a lot of capital usually went through that process, and now they've kind of exited it into the different quadrant.
Right.
If you're familiar with Robert Kiyosaki.
Yeah.
But they still want those returns. In the note space, I go to a lot of networking events and just meet people, and a lot of real estate networking events, because they understand real estate, right? And just letting them know that there's another avenue. And I, keep it very simple. Instead of giving them every bit and piece of information, as the investor, they don't really care about all of that. They care about certain things, right? What is my rate of return? What is my asset? What am I secured by? Right? And what can go wrong? Right. And when you keep it simple, and with notes, they're very simple. Right. Yes, there's nuances to buying notes and knowing what kind of documentation and things like that. But for an investor coming in, if I can just say, hey, I'll help you do this. I'll show you how I'm doing it, so that you learn at the same time. But if you have an IRA, or you have some money that's not growing right now, you can go get a secured 8 to 9 to 12% return. And in most cases, that excites them, and you just can't be scared to talk to people,
Right.
Open your mouth, and you have 2 ears and 1 mouth for a reason. So listen to what they're looking for. Not everybody might be a potential note investor, but there are people that are trying to circulate their capital, and they want their money to continuously grow.
Yeah. For sure.
I met you at a networking event.
Yeah.
And it was funny, because I just happened I went with a good buddy of mine, and I told him, I'm not sitting next to you. Go meet somebody. And I sat down next to you, and that's how we met.
Yeah. Been locked in for a couple of years now. Yeah, great connection. I love going to networking events. We went to one a couple of weeks ago and met some great folks there. And even, like you said, you have people who are experienced in real estate. I met a guy, he's like, I got 25 short-term rental doors. And, I was talking to another group of guys about notes and what that is, because they were college students, looking to get into real estate. He walks over and he's like, what are you talking about?
Yeah, people want to talk.
Yeah.
Right? People go to networking events for a reason. Right? They're looking for, whether that's, hey, I'm looking for a flip deal. Do you have any wholesale deals that are available right now? right? There's so many different avenues within the real estate space,
Right.
and it's the same thing, whether it's on a single family little flip or a development, right? We're raising capital, and there's just a bigger note on that deal.
Yeah.
Right.
Yeah.
There's notes on your car has a note. It's just, I want my security in the worst case scenario to not be an old car that I can have to struggle to get rid of.
Right. Exactly. Exactly. Yeah. But I think that's just talking to people and building relationships is key.
And be genuine.
And,
right?
and be genuine.
Just be a human being.
Just talk to people.
Open up. Talk about yourself.
Exactly.
And just let it go where it goes.
I even tell people in this space, like I'm relatively new to this space, but this is something that most people have never heard of before. It's an opportunity that, can help you generate passive income for a lifetime. And, like you just said, most people might not be note investors, but they might not be note investors right now. There are plenty of people who, maybe they're landlords or they're wholesalers or they're flippers. And, 2, 3, 4, 5 years down the line, they're like, all right, this is wearing me out. I'm exhausted. My family circumstances have changed or whatever. And, you keep contact with those people and they're like, hey, you still doing that passive income thing? Like, how does that work? And, years after you met them, it's like, okay, let's do a deal. Okay, I'm ready to take on this opportunity. So
Absolutely.
Networking and building genuine relationships is everything.
Absolutely. And, like you said, it might not be right now, but in most times, even for myself, I still do traditional financing, and when you can build up some capital, then I know where I like to put my capital, but it's not only notes for me, but I do like notes because it gives you the cash flow.
Yeah.
And it makes sure week to week, month to month, year to year, a little bit more, relaxing. It's that elephant off your back, and just go meet people. Yeah. I kind of live by a 3-foot rule. If you're standing within 3 feet of me, smile and say hello. Be a human. People want to meet each other.
Yeah.
And if they are an asshole and they don't like you, all right. Sorry.
Yeah.
Move on.
What's funny is my dad was a basketball coach and he had the same 3-foot rule. If the defender gives you 3 feet, shoot it. And it's kind of the same concept.
Absolutely.
Within
man down, man down.
Yeah,
right?
Exactly. You may miss it, you may hit it, but if you don't take that shot, you'll never know. So I guess
if you don't take that shot, it's a no. Right?
Yeah.
Just because you meet somebody and they say no, if you didn't say anything, it was never going to be a yes.
Exactly. Exactly. And you'll get another shot.
And just, it's going to be a little bit nerve-wracking. Like, this is one of my first podcasts. It's a little nerve-wracking, right? But that's how you grow. Get outside your comfort zone.
Yeah, for sure.
You're never going to grow if you stay within that same comfort zone.
Got to get past those nerves. I mean, even with I saw you guys with the passive hats and the cash flow hats. I'm like, all right, I'm gonna jack that. And I went and bought this and went to my first couple meetups and wore the hat and like, this feels stupid. Like people are gonna look at me funny. And I mean, conversation after conversation. What's that about? What's the hat about? Passive income.
Yeah, you're like, it looks stupid. It looks stupid. And they're like, I love passive income.
Yeah.
How do you do it? Right?
Exactly. And, okay, it works. Like I stepped out of my comfort zone a little bit and it generates new opportunities. So,
absolutely.
That's what it's all about, man, is creating opportunity. And there's so much out there, especially now. I mean, there's more ways to make money now than there's ever been.
There's a million, and you don't even have to leave your house.
Nope.
Right? You don't even have to talk to anybody a lot of times, depending on the industry. Right? But, I'm naturally a people person too. I like meeting people and sharing experiences and, that's how you grow. Right. And you'll meet some of your best friends at some of these networking events.
For sure.
All right. And just be a human being.
That's it. We're all looking for the same things.
Absolutely.
Everybody wants that peace of mind. Everybody wants that freedom. And, you build long-term relationships through things like that.
Absolutely.
So yeah. Well, that's all the questions I have. Colin, thanks for coming to talk to us.
Thank you for having me, man.
Happy Thanksgiving to you.
Happy Thanksgiving to you.
People, I hear you're smoking a turkey later. So.
Yes, sir. Got to go get it prepped.
Yeah.
Came over here on Thanksgiving. I was like, we can start it off with the podcast.
There you go.
And then go home and spend some time with family.
Yeah, I'm going to drop by for some leftovers.
I got you.
We'll do that. All right, guys. Well, thank you for tuning in to another podcast. Subscribe to No Genius YouTube channel, Instagram, TikTok. We're on all of them. And keep up, stay updated, and come talk notes sometime. See you guys next time.